Hello and welcome to another One Big Stock Market Sundays with me, Will, Jordan, and John. Lads, how are we?
Very good.
Good, man, good. So, as always, we've got a massively packed week this week. A lot's gone on. We've got a lot to talk about from this previous week and the week going ahead. So, we're not going to mess about tonight. We've got a lot to jump into. Jord, predictions? How are we looking? How do we end up?
Yes, we've got a sole point gainer this week. So myself, Jay, Will, and the stream also went green. John was the only person that went for a red week, and it did turn out to be a red week. I think by sort of late on Wednesday, the week so far was green. And then as the second sort of the last couple of days of the week came in, we dropped straight back down past what we opened on Monday. And then finished off slightly red. So a sole point for John, who now goes into the lead alongside Will. And then myself, Jay, and Stream, still just below and fighting to try and catch up. And of course, as always, we'll come back at the end for new predictions for the week ahead, which I think will be similarly tricky to work out in some ways and easy in some others. And we can talk about that later on.
Yeah, because I feel like with hindsight, like it was obviously going to be a red week now, but last Sunday I didn't think that, to be fair. So yeah, I think it's just a pure hindsight thing, really.
Yeah, it was an hard one to call, wasn't it, really?
Yeah.
I mean, we sort of knew what was coming, but we didn't know whether it was coming this week, whether it was coming the week after. It was basically a when, and we was all umming and ahhing next week about where we should go, but it just goes to, we're calling it pretty well. There's some good decisions made. The stream is now up as well for the poll, so get your votes in to see where you're going to finish for next week. So without further ado, let's get straight into it. So Will, you want to take over, my mate?
Yeah, so of course, everyone's going to want to know about the US attack in the Middle East, but but just before that I do go into that, I just want to quickly mention PPI, which came out on Friday. So now we've had CPI, we've had PPI, PCE, and now PPI, all of which came in a bit hot. So all the inflation data has basically come in above where we wanted it. So 3.6 versus 3.5 a month over versus 0.3. So essentially, that the TLDR is the Fed isn't cutting rates anytime soon. But just moving straight on. So I just wanted to do like a quick breakdown, and I have asked and I did ask Gemini to help me. But obviously, everyone knows that the US striked Iran. They look like they're going for a general regime change. They've targeted nuclear kind of sites. They've now killed I can't actually remember like the title of the. Oh, here we go. The supreme leader. So the supreme leader's dead. There's chaos. There's the blockade of the strait, and obviously Iran are now targeting lots of like the Middle Eastern countries. We've seen Dubai airport be hit. So a lot has happened in the last sort of 36, 48 hours or so. So I just wanted to go into that a little bit because I know a lot of people will be wondering about that. And then also do our usual segment of Bitcoin, gold, silver, etc., and just see how that's been faring up in the wake of all this. So a little tiny bit of kind of a recap. So this is the Strait of Hormuz here. This tiny little gap. It's 21 miles wide. I think that's at its narrowest point, and this is a vital shipping lane. So there are other choke points in the world, but this is the energy choke point of the world. So like a huge amount of stuff essentially goes through this tiny 21-mile strait. So there's a 2-mile shipping lane one way, a 2-mile gap, and then a 2-mile shipping the other way. So it's a tiny space of land for a lot of ships, a lot of boats, effectively, a lot of tankers. So in that tiny little strait, daily there's 20.5 million barrels of oil, which is 21% of the world consumption. There's 20% of the world's gas, and there's 84% of all the oil and gas goes to Asia, so China, Japan. So a lot of that is all moving this route down here through the Strait of Malacca, and then up here. So it's a really important place. There's fertilizer, chemicals, food. Like, this is a major geopolitical situation. So so we have Iran, there's the UAE, Oman, Qatar, Kuwait, and Saudi all kind of have coasts and bordering on this very important piece of water. So I just wanted to show this. So this is the oil and gas reserves by the world, and we can see here. So it's a really important point, as we can see. Iran has massive fields, Saudi, the UAE, and right into Iraq as well. So there's tons of oil and gas in this whole area. However, Saudi does have an LNG and oil tunnel, like a pipeline, which is the east-west pipeline, but that only does about 5 million barrels of oil a day. So that can miss out the Strait of Hormuz, but it only can do about a quarter of what like the current supply is, really. So this is like a live kind of tankers of the world. And again, I know I keep hammering this point now, but this is a choke point of choke points. This is a critical energy kind of area. So naturally, like, this is going to affect the price of oil and gas. Because it's the weekend, it's a little bit harder to get kind of up-to-date prices of everything. So I have got these weekend prices of a lot of stuff, which isn't quite as accurate, I suppose. But US crude is up almost 15%, which is obviously a lot just over this weekend. All because of the Strait of Hormuz, all because of Iran. And Iran, because they've been targeting airports and like kind of places where tourists are as well, I wouldn't be surprised if they then went and targeted Saudi oil kind of sites, gas sites, UAE oil sites. So this could go higher if things do escalate. This is so this is like the UAE crude. This is up 4%. So the Saudi stock market is actually open on Sunday, and this is down 2.18%, just to give you like a different idea of like the impact on things. Bitcoin I found very interesting. So Bitcoin was having its usual kind of chop around week around $62,000 to $68,000. When the actual invasion happened, so that was early for us yesterday morning, Bitcoin did lose sort of $2,000. But since then, it has rallied fairly well, and now it's just sort of back in its usual chop, really. So I don't think that there's much of a story really on Bitcoin, to be honest. Let's have a look. So weekend gold up 2.33%. And this also has a bit of the weekend gold because this is digital gold effectively. But this also just shows the week. So when the invasion happened, it spiked up. That is to about the support. I think that's around that the all-time high, which is just over $5,550 to an ounce. Then it kind of lost some of its kind of ride up, and now it's sort of stabilizing around so that's around 5,400. So we are getting back to that kind of all-time high here, as I was saying, which is I think around 5,600. Silver, similar as you'd expect, around 4.5% over the weekend. And this is all in relation to the US attack. So people are thinking there's mass uncertainty, stocks will go down, so they'll buy silver, gold, and they'll buy the dollar as well. So the euro has weakened 0.5%. So this is like the best I can do for the weekend. So the dollar has strengthened by 0.5% to the euro. Which does mean that the dollar is doing what it's supposed to do, and people are going to it in times of weakness, which is good in theory. So the dollar's up probably around 0.4 to 0.6%. The Nasdaq 100 is currently down 1%, which isn't too bad, to be honest. for what happened. The Dow Jones index is also down about 1%, and then the FTSE 100 is down about 0.7%. So overall, this is obviously a critical situation. Trump's kind of playbook, at least in my opinion, tends to be a short, sharp operation. But what exactly is he trying to achieve? Obviously, he now has killed the supreme leader, but you can't really do a full regime change from the air. So I will be interested to see how it plays out. On last week's stream, I did go into detail, looking at kind of past military conflicts, and the kind of standard thing, the standard thing which happens is over the next sort of 1 to 3 days, the market loses 2 to 4%, and within a week to a month, the market tends to have fully recovered, if not is already higher. So at the moment, I am hopeful. This is definitely bigger than just dropping bombs on Iran like they did last June. So like this is like a big operation involving what 7, 8, 9, 10, 12 countries. So it's so it is a big deal, but Trump won't want oil prices to go up because that means petrol will be more expensive. He won't want oil to go up because if it does go up and stays up, that means inflation's going to go up quite a lot. I'm talking to sort of 4, 5, 6, 7% if oil does make a sustained increase upwards. And obviously, both of those two things go against him winning the midterms. So at the moment, chaps, I'm leaning towards this is a bit more of a quick kind of event. I'm not sure what you guys think about that.
Yeah, I'd say the same. I saw a few, not conspiracies, but conversations about it being a wider plan, effectively against China and their energy sector and their oil supply, because Venezuela and Iran, look back to a year ago, basically their two main supplies of oil. That obviously has changed from Venezuela, was changing from Venezuela, and people are putting sort of two and two together and assuming this was the same from Iran. I don't think that's the case. I mean, in the instance where those are both cut off from China, they can go and buy oil elsewhere, albeit not as cheap. Like Venezuela and Iran were selling it extremely cheaply, but they'll still get it. And similarly, their focus isn't on oil. They've got a massive solar energy production that's accelerating more and more all the time. So I don't think it's to that. So I agree on the same view, just from a different angle in terms of I don't think a lot of the rhetorics that are being said in terms of why this might be a wider sort of policy and a wider thought out scheme, part of a bigger plan. I don't think those things hold true. So I'd also say the same thing about it being a more short term and definitely, as you said, like one of the big focuses about not wanting it to be dragged out would be the impact of inflation and the increase of energy prices and oil prices.
And I think just overall, just sort of one thing I do preach basically every week now is that if the market goes down, I know it's not nice to look at, but as long-term investors, and I think most people who watch this are probably around 21 to 35, 40, like we all have 20 to 50 years left investing. We actually should welcome any big dips. Any big dips which are short and sharp, I'm 100% buying them. Yes, it'll be a little bit annoying and tough to look at those numbers going down on my actual current investments. But honestly, I've got to the point where it just doesn't bother me because I can see the vision and I'm only buying my long-term investment. Like I'm not taking risky oil plays hoping it pumps an extra 5% or something like that, you know? So I know, guys, it's not nice to think about a war and what it means for the stock market, but I'd probably say that there are going to be some really nice buying opportunities in the next 2 weeks.
And on top of that, I think it's something that we'll touch on in a minute. I don't know if you guys seen it before the market started, that Dubai the UAE has actually shut their stock market for 2 days whilst everything's going on. The fact that they've only shut it for a short amount of time might indicate that something might come of the new supreme leader that was appointed, interim or whatever it was appointed. I think, like you say, it's not something that anybody's going to want that's dragged out for a while. I think obviously if oil starts shooting up, and obviously you've got the midterms and stuff like that. Start to chase inflation. It's not what people are looking for, but I think you've hit the nail on the head there, Will. I think a lot of opportunities will present themselves. I think obviously staying, I think even throughout the year in these times, having some cash in the portfolio. I know everybody's different. Everybody's has their own thoughts on that. But I think having some cash aside, it really works in this. And if you are buying more speculative stocks, more riskier stocks, you have to, when buying those stocks and getting involved with them, understand that high beta, high volatility does come with this. And obviously when stuff like this happens, it can be nasty in the short term, but obviously if you were buying it at a discounted price in the long haul, you're going to be a winner, aren't you?
100%. And I'm just chuckling at the comment there from Paul. Yes, I am saying buy the dip, because as a long-term investor, I think it's a great time to buy. So yeah, 100%.
I do think it's the right thing as well. I have quite a few people reaching out to me over the weekend saying, is this going to be this? Is this going to be a good price? Is this going to be a good price? You have to ask yourself, if over the last couple of months you've been buying a stock at $10 or $20 or $30, you're now going to be getting it $5 cheaper, etc. It's a gold opportunity. And I would say that some stuff might be worth approaching with a 3-day rule. Will, what would you say on that?
Possibly. I think I'd probably use a bit more TA, to be fair, because it's like more of like a mass, like a sort of like a wide market issue. If things are dropping right near like the 200-day, a simple moving average, I'd probably just buy. If it's sort of down 10, 15, 20% from say only 2-3 weeks ago, I'm probably going to buy that. But obviously it does depend on the stock. But also just one other thing, I wouldn't say it's purely a nothing burger, because of oil and because the effect that can have on inflation, and because that means that the Fed is less likely to cut rates. And if we do see oil consistently higher, that means the Fed might even have to hike rates. So I'm not saying that this whole war is a nothing burger, particularly because of oil and therefore also a liquid natural gas. So those two things are really important, and they have a massive effect on inflation. So it's definitely one to keep an eye on. But just like how I made the point with the government shutdown, I think sometimes it's like easier for our brains to understand government shutdown must be bad, war must be bad. And sometimes it is. But honestly, I'm still more thinking about the wider macro issues and data and things like that, rather than sort of following step by step of this war. As someone who likes geography, politics, geopolitics, I'm following it, but I'm not really having my stock market hat on while I'm following it. So just like a word of caution, like if you guys are watching lots of like videos or watching like the news heavily, that's fine, but I wouldn't have your kind of like stock market hat on the whole time while I was watching those, to be honest.
Anything you got left to add on to that, Jordan?
No, disagree fully.
So obviously, is there anything else you want to touch in that sector, Will, or is there anything else you want to incorporate into that, or do you want to move into your next section? Or
yeah, let's move on. John, what you got for us?
The next section we've got something to touch on Nvidia earnings. If there is any more questions in the chat, don't be afraid to put those questions in, and obviously we're happy to talk about them. John, so obviously you've got some to touch on Nvidia here, so I'll pull it for you there. Where's Will? There you go, mate.
Perfect. So we had the Nvidia earnings this week, which was probably the biggest one of the week, and there were a lot of eyes on that. Nvidia is always expected to perform well, and I think you could say that it did perform well. But the stock market reaction was they were down 5.6% for the week. It wasn't a great reaction. If we look at how they're done against the expectations for the quarter, they beat earnings per share by 5% and revenue by 3%. Year over year, earnings per share is up 80% and revenue is up 73%. So quite a strong performance, really. I do have some more slides to go into it further. So if we look at the highlights, they reported a record quarterly revenue of 68.1 billion, which is up 73% year over year. They recorded a quarterly data center revenue of 62.3 billion, which was up 75% year over year. So they're really starting to see that massive influx of data center orders, because that growth is insane. I will say I've never actually looked at Nvidia earnings before, so whilst I was reading through this, I was thinking I can see why everyone loves this company, because they just perform really well. They had a record full year of revenue of $215.9 billion, which was up 65%. And then they returned $41 billion through share repurchases and dividends. It's always nice to see a company give some money back to the shareholders, apart from performing well. And Jensen said that the Grace Blackwell with NVLink is the king of inference, delivering the lowest cost per token. So we can really see that in terms of data infrastructure, AI infrastructure, Nvidia is the one that people want to go for, because it is delivering that lowest cost per token, which inevitably means better margins for those companies. Right. So onto the data center, they had a full year revenue of $193 billion there, which is up 68%. The Rubin chip, which they unveiled, which was a range of 6 new chips that can deliver up to 10% reduction in the inference token cost. So going forward, that's going to be even bigger than what they're already doing with the Grace Blackwell. And obviously they need to keep those innovative products coming. Otherwise, other competitors in the market will start to eat up that market share a little bit. But I think there's plenty of money to go around in the data center space at the minute. They signed a multi-year deal with Meta for on-prem, cloud, and AI infrastructure for training and inference. We don't know the size of that deal, or I couldn't find it anywhere. So if any of you guys have found it, then please share. And then they strengthen the collab with CoreWeave to build 5 gigawatts of AI factories by 2030. That's meant to say, small little typo there. So yeah, strong performance in the data center. Obviously, we know that makes up most of their revenue. So when they start putting up figures like this and they're still innovating in that space, that's just healthy for them going forward. In terms of the other sectors, gaming and AI PC, Q4 revenue of $3.7 billion, which was up 47% year over year. 16 billion for the year, which was up 41%. We've seen the likes of AMD struggling with gaming recently, so the fact that Nvidia performing well shows how healthy the company is overall. Professional visualization was a quarter up 159% year over year for the quarter and up 70% for the year, which is pretty insane. And then automotive and robotics was up 6% for the quarter, 39% year over year. So strong growth everywhere. Professional visualization, that is a healthy year over year growth. Can't really complain. No aspect of the business seems to be performing poorly, but that's what you want. If we look at the outlook, they have said that the Q1 revenue will be 78 billion, plus or minus 2%. Now, this reflects a 77% increase year over year. I believe that is stronger than what they done for the last quarter. So even though we're heading into Q1, they still expect stronger performance. And then GAAP and non-GAAP gross margins are expected to be 74.9% and 75%, whereas it was 60.5% for Q1 of 2026. So very healthy outlook. I'm not actually quite sure why it dropped. I don't know if you guys have any information on that other than what's been going on. But yeah, that's how they're done financially.
Anything you want to add on to that, Will?
Yeah, so I think that's the perfect slide just to leave it on there, to be fair. So we knew that they would beat John, sorry, could you just put that slide back up, mate? So therefore, we knew that they would beat, but it was the guidance which really, really mattered as well. And that 78 billion guidance for Q1 is just absolutely huge. So to be growing 70% year over year, which is on revenue, which is just, it's incredible. And I think people start to think that the numbers would slow because I think that basically they are so big now, 4.5 trillion market cap, massive revenue numbers, massive growth, but they just keep growing. So they've had crazy growth multiples in the past with 200%, 300%, 100%. They slow down a little bit to sort of 40, 50, 60%. Now they're back up to 77% growth. So it just shows you just where they're going. I think there is some critique of that because people are thinking, well, yeah, Q1 is going to be gigantic at 78 billion. Let's be honest, they're going to hit 80 billion because after the whisper number is probably 79, they'll hit 80. So let's say 80 billion of revenue for next quarter. but people are thinking, well, where are they for 2027? You know, where are they for 2028? So if we say 80 times 4, 320, add a bit, let's say that they'll probably do what, 360 to 400 billion revenue for fiscal year 2026. So therefore, can they beat that again in 2027? Can they beat that again in 2028? Obviously, the market is forward looking. And whilst it's clearly another 1 or 2 years of massive capex, massive growth from like the big players, Google, Meta, Amazon, Microsoft, is it going to be sustained long term? I think it is, but the market, I think, is pricing that it won't necessarily be that. So Jensen Huang on the call spoke a lot about physical AI and also robotics. And I don't know whether anyone recalls a conversation which Beast and I had a few months ago now in the server, but we were talking about that, and he made some great points. But Jensen has always been ahead, really, and that is basically the next pivot. They've already pivoted many times before, and that will be the next great pivot where they pivot to selling physical AI chips and loads of chips which are moving the whole AI sector, FSD, robotics forward further and further. So I thought it was like absolutely fantastic quarter. Jay, could you split my screen up, please?
What is in your message?
And then, so he's also mentioned sovereign AI being a new thing as well. So countries like Canada, France, Singapore, the UK, certain Middle East countries as well. So there's going to be more demand effectively in the future from countries which we're already seeing. And they've already started to ship out the Vera Rubin samples to customers as well. So whilst everyone's thinking of Blackwell, Jensen's already talking about like the next channel. He also mentioned AI agents a lot, and I've mentioned this quite a bit over the last 2, 3, 4 streams. And this is going to only increase demand for these really, really amazing chips. We're going to move to a way of not using AI as like a Google search, but we're going to be using AI as an agent layer to do things for us. It will still help us, but it will do more things. It will help us shop. It'll help us book flights, hotels, buy things. It's going to work differently, and that basically needs more compute. And also finally, Jensen spoke a lot about playing the long game and really investing in the wider AI market. They're not increasing buybacks. They're not increasing the 1 cent per quarter dividend. They're basically recognizing that they've got a shit ton of cash, sitting there, but they want to invest in the wider ecosystem into so many different types of companies. Yes, some of that revenue will make its way back to Nvidia, but they want to ensure that the whole sector has the best chance of changing the world effectively and moving forward and creating the best environment for all companies to do well, because they've got such an advantage of being such a large company with such a truly incredible product that they can happily and easily try and bring everyone else up with them and not lose any market share. So I think it was a great quarter. The reason why I've got my trading view up is because we can see that, well, the stock actually dumped after earnings. Think just have a quick check how much actually went down. About 8.5% down from the kind of high it pumped to after earnings. And I think essentially it's just sitting in this choppy range, which we've seen for ages now. This choppy range, which it's just going to stay here in this kind of range, and it's going to keep doing that until a catalyst to bring it out. But I'll talk about a catalyst 2 weeks away now from GTC, a massive event for Nvidia. There's surely going to be some amazing catalysts there, some amazing things Jensen says and shows off. So I think in order to see a breakout of the stock, we need it to pump out and above that 196, 197 support, resistance, during GTC. Otherwise, we're going to be chopping and chopping for a long time. I think the reason why we are chopping so much is because the fear over capex. 50% of their revenue is from Amazon, Meta, Microsoft, and Google. Is that sustainable? Some people think not. And also, people are looking sort of 3, 4, 5 years into the future. Will these companies still be spending this money? I think they will be, and they'll also be spending probably more on like the physical AI stuff. But I think right now there's just a general sense of the analysts, Wall Street just doesn't know what's going to happen, so therefore they're playing it safe and just keeping Nvidia chopping in that range.
No, I think that's a good take. I know Will TTD Chart wanted to whip out that trading view and show us his skills. No, but I think you bang on, and I think, like I've said in the chat, just replied to someone, Nvidia's a bit of a unicorn, isn't it? So it's one of those stocks that is a good stock that's going to be there for the future. Have you got anything else to add to that, George, or anything like that, or Will?
I was going to say, I think an interesting reflection is like on the robotics side. If you think 10 years ago, Nvidia was just a gaming stock or gaming company that had a very tiny little data center sort of revenue or more expenditure stream in its reports, but it was gaming. And even as recent as 2020, I want to say, gaming was still more than 50% of its revenue. So it's like, think back 10 years ago till now, you wouldn't have expected it to be such a massive, heavy on chip makers. And then think 10 years forward where we could be in terms of robotics, and looking back and thinking 10 years ago their main revenue was being a chip maker, and that's what they were known for, and now it's the robotics side. So things like 10 years is a long time, and lots can change, and I think they've proved that already just with the last 10 years with the change they've had. And I think that comes back to the wider theme around the earnings, which was just that diversification a little bit, and that's I think what they're trying to push a lot, as Will said, on the sort of hyperscalers and their dependency on them, and where most of their revenue is generated from is from those hyperscalers with the massive capex. And you might be thinking, well, they've already pledged to spend 600 billion next year, and the year after that's probably going to be in hundreds of billions as well. So they've already got like that revenue coming in. I think a little bit is nitpicking at Nvidia, because there are less things to pull apart as areas to improve, and people want to see strengthen more because so much of it is really good and really positive. So I think there is an element of that. But of course, like, people always want to see that diversification where they can, and the dependency on less dependency on like a small select number of companies or customers. I wanted to see it more spread out. And similarly, they wanted to, I think they noted on their networking side, like 11 billion in revenue. So that's growing as well. So it's more like a full-fledged data center infrastructure provider rather than just the chip making side, and diversifying that way. So I think that was sort of like the main theme that I pulled away from the earnings, and also the main thing that they wanted to push across and try to reassure and reiterate to investors alike.
I've literally just been nodding like the last 2 minutes. I do completely agree with that, Jordan. Just one thing to build on there, mate, is Jensen, as you said, has pivoted before, and he absolutely is the best CEO to make a major pivot again. So I think that's kind of what you're saying, but I think it's led from Jensen that he's made a major pivot before, and they are doing it again because, well, they're already doing it, and they will be successful because they are just so good. But also, you said something which kind of jogged something else in my mind. They are slowly becoming the Berkshire Hathaway of tech. They're investing so much into other tech companies, to OpenAI, tons of companies, CoreWeave, loads of companies, that they may in the future, let's say that CapEx does slow down from the hyperscalers and they're making slightly less revenue in terms of growth revenue, well, they'll have investments which are doing really well. Sure, every single one won't be a hit, but they're going to be making revenue one way or the other in the future, and they're spreading themselves out in terms of investing into so many companies to really support the AI industry, but also to give their shareholders like an actual return as well. So I'm really, really, really bullish. It might be that it just chops for a long time, the stock, but I think at some point we're due a booming drive up, and I'm looking forward to that. John?
Yeah, I think just a quick note I want to add in as well. The outlook didn't include any China numbers, because obviously there's been a when they'll be able to sell, or how much they can sell there. So that is another caveat of could be more revenue to come. In terms around the sustainability of their performance, I think a lot of the companies are writing off the capital for GPUs after 6 years, if they're going to keep on bringing out new innovative models. And I think AI is here to stay. It's not going to go anywhere. It's just how much is it going to be utilized. And one of the biggest barriers definitely for AI is possibly the cost for companies. So if they keep bringing out chips that are lower than that cost per token, these hyperscalers and other providers are going to constantly be buying those GPUs to make sure that they can offer that lowest cost for their consumers, because otherwise they'll just go to the other provider that's buying the most up to date. So yeah, I don't really think there's much issues around the sustainability of the performance. And like Jordan and Will have just said, Jensen's probably one of the best CEOs out there, and he can pivot. And I don't think he would hesitate to pivot if another big opportunity came around for Nvidia, for them to just swallow up that part of the market.
No, I think you've all hit some very good points on Nvidia there, to be fair. But don't want to consume too much of the stream on that section. I know you guys have touched quite heavily on that now. George, I know you've got a big section here that a lot of people should be paying attention to be fair. I know you've put some time into it. So the Jane Street scandal. On there.
Cool.
Oh, there we go. It was having a meltdown. 2 seconds. If you want to share, George. George, do you want to remove your screen and share it? Oh, there we go. There you go. It's working now. It was having a meltdown
then. So talking about Jane Street, who kind of got pulled into the light this past week. And for those who don't know what Jane Street is not a person. It's a quantitative proprietary trading firm. And what that is, and I don't think anyone's at fault for not knowing who they are, because I think they're one of the classic cases of where big money and big institutions are kind of like in the background, don't get much focus, but they're a lot of what moves the money and a lot of what holds the money, just sort of quietly working away, which I think is how they like it and is by design. So they're not like a hedge fund. They don't trade other people's money. They trade their own money in the billions and billions. And they're one of the world's biggest sort of market makers. And effectively the role that they provide is they provide a lot of the liquidity in the market and act as like the middleman between buyers and sellers. So keeping the market moving efficiently, keeping buyers and sellers going through as quickly as possible, being that link and that glue between the two, as part of the design of how the market works and how it functions. Their specialty is kind of in ETFs. So if you've ever traded a Bitcoin ETF or just any general sort of standard stock ETF, there's a high likelihood that some of the liquidity that you acquired went through Jane Street. Their numbers are quite impressive and they've grown quite a lot quite recently. So maybe there's something we can come back to. I think their profitability is about it's over 10 billion. And in their actual trading revenue in the first quarter of last year, I think was 24 billion, something like that. So huge numbers, but just one of those names that despite the big numbers, you don't hear too much about and don't know too much about until something like this comes up. I think the numbers are that they handle about 10 to 20% roughly of sort of ETF trading volume in the US market at least. So just think of them like as the plumbing, as I said, about that sort of financial system and how the trading all works. So what's happened and why has their name come up and why we're talking about them? So back in 2022, a company called Terraform Labs, which is involved in crypto, went through basically like a liquidation stage, and they later filed for bankruptcy. And through that bankruptcy process, the liquidators who are managing that have brought up a court case against Jane Street as part of that sort of their investigation of why that Terraform Labs failed, what went wrong. And the main headline basically is their claim of Jane Street manipulating the market using insider trading to basically profit and at the expense and at the cost of others. They have looked through the blockchain, so basically the audit log and the receipts, if you like, of what's been traded and when, and looking through Terraform specifically. And there's sort of like some quite key and clear sort of like pickouts where they have jumped in and jumped out with really large sums of money at very suspicious times before markets have made a change, which obviously is a big red flag and raises suspicion, and is part of what the liquidators have brought the court case up and are trying to sue Jane Street for. So I think that some of the numbers were, I'm not sure if it's got it on this page actually, but Terraform Labs, the company that went bankrupt, pulled 150 million from a liquidity pool, and then sort of 10-15 minutes later, as if by magic, Jane Street dumped 85 million of the same pool. This is what sort of like the liquidators are looking at as the move that triggered a load of panic, which then later caused that stable crypto coin to drop, and I think about 40 billion was wiped out in days. Effectively, Jane Street made all this money, jumped out before everyone else knew. Retail investors were left holding the bag, as that classic saying goes, and lost down on the money. And when everything went to bankruptcy, lost out entirely on their money. And meanwhile, Jane Street and possibly the insiders as well have gained a load of money from that insider knowledge, the insider tip-off, to jump out and jump in when time is best suited them. So that's on the Terraform side. And as I say, that was back in 2022, and then they filed bankruptcy in 2024. So it's a few years ago now. So sort of why is it coming up? So the court case has only come up this year for 2026. That's what's brought it to attention, and it's then brought in some other sort of, I guess for now, conspiracy theories without proper proof about what Jane Street has been doing more widely, outside of just that one case of market manipulation, insider trading, insider info, etc. So anyone who's involved with Bitcoin or crypto, but Bitcoin more specifically, might have picked up on some things being discussed lately, especially over the past few months on the charts and on Bitcoin price movement, about a pattern of around 10 a.m. Eastern Standard Time, so like 5 o'clock for us, maybe 6 o'clock for us, that Bitcoin dumps, and like a very, very regular routine and consistent pattern of it all dumps at that time, and then throughout the day brings back up. It's hard to make out exactly on this, like it's not an exact science. It hasn't happened copy and paste every single day, because nothing is as obvious as that, but you can sort of see some of these red candles or consecutive red candles that have quite equal spacing. It looks quite regular for something that's, supposed to be a massive openly traded market and should have a lot more irregularity to it. So the conspiracies came out about Jane Street, the people in question that we're talking about, having a massive algorithm with their funds. As I say, they have tens of billions of their own funds that they trade in exchange, having a big algorithm to regularly every day dump loads and loads of Bitcoin, bring the price right down, and then buy it at a cheaper price, and just rinse and repeat that process. So they're selling up higher, they're dumping at the price, making it all come crashing down, obviously triggering stop losses, causing liquidations, bring the price down, buying in again, and then going back and rinse and repeating that process to make money regularly. And there's reports and suggestions of them making sort of upwards of $80 million every single day from doing that. And of course, that is the definition of market manipulation. As I say, they have huge amounts of funds and money, so they do have the sort of power to do that to some extent. Bitcoin's obviously much bigger than tens of billions, but it is a number big enough that it would have an impact if an algorithm like that repeated so consistently on such a large scale all the time. The other thing that sort of fueled the fire of that conspiracy, and if we zoom in a little bit on this chart here, so the court case came up, as I say, earlier this week, and as soon as it did, the people felt like the normal 10 a.m. dump didn't happen, and instead it's this area here. I'm just going to highlight with this box that we're looking at. So it did the complete opposite. Now, it's not proof, but of course it adds, as I say, it adds fuel to the fire of that conspiracy of, as soon as the court case comes up, as soon as they've basically been called up on this idea of market manipulation, and someone said, actually, I think you're doing this that you shouldn't be doing, I want to investigate you, all of a sudden that pattern has added like a chain break in it. So it's added some sort of conviction for those who are really strong believers of that conspiracy, that that's effectively all the proof they needed. As soon as the court case came up, as soon as they were called out for market manipulation, the market manipulation that they were seeing suddenly stopped. And similarly, at the same time, as much as Jane Street have denied the sort of accusations, If you go and look at their Twitter page, their Twitter page has sort of been cleared, which again is something that adds more suspicion and adds some sort of conviction to those that are in firm belief that Jane Street is guilty. So then that just expands more widely of where does the market manipulation extend to? Like how long could it have been going on for if they have been doing it? How many areas does it extend to? And I guess it comes back to the wider conversation that we have a lot of the time in the Discord server about, big money controlling and making the market, and sometimes retail is sometimes at the mercy of institutions. And I do think there is a lot of power and control in institution investing for sure, and institutional money. The institutional sort of money pool is still bigger than the retail pool, and they do get to call some of the shots to some degree. As I say, the sort of like the main sort of talking points there are initially the Terraform side of things, and them jumping out 10 minutes before the sort of big, as I say, all the big money getting out 10 minutes before everyone else heard bad news or heard some murmurings, caused panic, and made retail holding the bag. I guess another thing that feeds into Jane Street is that they were already fined in India for manipulating derivatives, like $500 million, and I think partially banned for some practices there. So they've already got like a little bit of a criminal record, if you like. If you maybe suspect someone of drunk driving and a criminal record before they got arrested for drunk driving, it's going to make you a little bit more confident that your suspicions are true and accurate, and it's a repeat of the same thing. I think overall it could be a very positive thing for the crypto space, especially because it's bringing a big spotlight to that whole world of institutions and market manipulation, and potentially others who maybe are also manipulating the market themselves are going to feel a little bit of sort of breathing down their neck, and a little bit of a like a watchdog over them, and maybe make a pause in those practices or tell off them a little bit. But it is a good thing to have a spotlight on for sure. It's a good thing to be talking about, and it's a good thing to be in the news, because for sure I don't think the market is innocent. There are institutions that do use their advantages, which they do have, to benefit and to profit from it. And as I say, Jane Street making 80 million a day, which as I say is the sort of like theorized amount from copying and pasting the same algorithm and using their fund and their size advantage to rinse and repeat the same process and make as much money as that per day. Of course, others would be doing the same thing if they have the opportunity, because the market is sort of made up a little bit in that way for them. I think it's an important topic to keep in the back of your mind, to keep aware of, to keep sort of to stay sharp on, to be aware of what things are and aren't in your control in the market. Of course, most of it isn't, but the sort of side and third players who also feed into the market and reduce a bit of it. Hopefully what we see from now is less market manipulation. Is it going to eradicate it? No, I don't think so at all. Maybe we'll see a more natural crypto stock market, at least if there are players like Jane Street who were manipulating it for a long period of time, sort of backing off a bit. We might see a more natural market and it play out more naturally. But I don't think it from here means that Bitcoin's been stuck in a rut and has been going down because of Jane Street, and that's the only reason it's been going down, or it's the only reason it's going flat and now it's going to rise up. I don't think that's the case at all. As big as Jane Street is, there can't be the sole reason, in my opinion, for controlling something that much. But lastly, what I do want to touch on Bitcoin, just an interesting scope to have. So these two blue lines, just a couple of trend lines that I've drawn from a very long-term trend, a long-term view on Bitcoin. This is going all the way back to 2018, all the way up till now, looking on a weekly. And you can see quite clearly how those trend lines have been respected so far. And the current price action and share price coming down to that lower support level. So it's a really interesting timing to see what happens with Bitcoin. It's at traditionally the bottom end of its long-term range. I'm not saying to anyone to, this is a buy signal. We'll have to wait and see how it interacts. You've seen back here a few weeks ago, it did come down to the support level and then come back up. So we'll see how it interacts with that again. So just an interesting thing. There are parts of the market and parts of share price movement, I feel, where things do seem to just line up a little bit too well, and timing seem a little bit too convenient in a way. So we'll see what happens see if it still respects that long-term trend line, long-term support. But in more general and more widely, as I say, for the sort of Jane Street side, let's see what comes of that court case. We'll keep an update in the Discord channel and see if anything happens. As I say, I don't think market manipulation is going to stop from one person being sort of brought up on it and caught out, assuming everything does get confirmed. So we'll just wait and see.
I think on the back of that, to shed some light on Jane Street, because in regards to that, when you look at things, and I think there's going to be a microscope put on a lot of the things that they held. Now, obviously, Jane Street's it's not new news. They've always been known as somebody who plays with it a little bit. So they had a significant holding in Ondas. I think it was 5.2%. And there would be a same type of pattern that had happened. We would call it golden hour at 8 o'clock, but at 6 o'clock-ish, it would start to drop. You'd start to find that it'd go down a little bit. Then between 8 and 9, all of a sudden it'd start rising again. And for a longest time, it is a high beta stock, but for a longest time, there was a lot of volatility inside of that. And obviously, they disclosed a position in November that they've now dropped their position a couple of percent. So they own like 11 million shares instead of like 19. And a lot of it stopped. It started like leveling out a little bit now. So I think, like you say, though, George, I think it's going to be something just to watch. But I think there's going to be a bigger. I don't think they're solely reliable for all of the market manipulation that happens, but I think there's going to be a microscope put onto a lot of the stuff that they did have their fingers in and on, and people are going to be looking for any conspiracy they can on charts and go and noticing patterns. And but I guess one question I've got on that, George, though, what's your perspective on this? Let's say Jane Street are found to be guilty for the Bitcoin manipulation. Let's say they are. Let's say that it's proven. Would then that cause a chain reaction of a lot of people suing them for refunds for the losses and damages?
Yeah, it's interesting. I think when I was looking into it a little bit more, there are a few other murmurings of extra court cases and more people looking to potentially sue Jane Street, and maybe they'll be waiting to see what comes about of this one. If it's a long drawn out process with nothing at the end of it, then they're not going to bother, obviously. But if it's a pretty concise and conclusive court case, then of course they'll jump on. So we'll see it if more come about. But I do think there are murmurings of more happening. Jane Street have loads and loads of money, so I'm sure they'd rather just settle for those cases, pay people out, and move on. And as I say, they kind of print money and they've expanded really quickly. And part of that, I also think, feed into the suspicion of how quickly their revenue has grown. It comes back to, have they done everything legitimately and fairly to have, I think in 2024, some of their numbers went up 100% in 1 year of trading. And for a big firm like that, they're making more money than big national banks and stuff like that. So it's almost a little bit Wolf of Wall Street-esque, where they've risen very quickly in some of their numbers. They've been around since 2000, but their sort of biggest numbers and latest numbers have come back quite quickly. So of course, others are looking over their shoulders, thinking, "How's that happen? How does that add up?" Yeah, I think there probably would be more people to sort of raise their hand and say, "Hang on, I think we've also been a victim of market manipulation in our downfall," and that sort of thing. But to be fair, it wasn't Terraform that raised it. It was those managing the bankruptcy and the liquidators who sort of, in going through all the files and going through the background information and managing that process, were the ones that brought it up and are doing it. So yeah, for sure, I think it can repeat again.
Yeah, and I know Terraform was obviously subject at the end of some type of fraud as well, wasn't they? That they got done in court for some type of that as well. I did look into it a bit myself. But I think, again, it's a bit of a rabbit hole, because when does it stop at the losses where they claim they were the reason that people took losses? I'm thinking, like, if they were found to be guilty of what's being accused, once you have 5 people say, yeah, that affected me, then you have another liquidation that happened not long ago. Well, it affected me. And the one before that, like, it's a bit of a rabbit hole of when does it stop? Like, if they've been manipulated since 2022 or whatever it was, sorry, that's 3 years of any downfall where somebody can say at 10 o'clock or whatever it was their fault. And again, it's a massive rabbit hole that I don't think ever's going to be plugged a little bit. But yeah, it's very interesting. I think it's definitely something that's worth paying attention to. I think people sometimes now skip past this type of stuff when they see it on X and stuff, but it's actually very important stuff. Will, have you got anything else you would like to put on that, mate?
No, I think Jordan's covered everything, to be fair. So
now, to be fair, tonight's pretty stacked with some in very interesting stuff, and I know Will's now going to touch on something which I'm probably going to butcher, which is Citrini Research, Citrini even. Probably
Citrini,
butchered
yeah.
that. Yeah. Again, this is another very interesting one that sort of goes into the one that we talk about after. So, yeah, Will, if you want to take it away with that, mate.
Yeah, so I slammed this in the little chat we've got going on for the schedule for the week. I think on Monday night, I was like, wow, this is a meaty, big story. So what is this? So on Sunday night, so about 7 days ago now exactly, Citrini Research put out this paper called The 2028 Global Intelligence Crisis. Basically 30 million views. This got absolutely passed around. This went viral. Everyone on Wall Street read this. And this effectively was the reason why the stock market went down on Monday. It didn't crash the market on Monday, but the market was down about 1.5% on Monday. This is the reason, this article. And the reason why it's so significant is because this is a Substack article. This is effectively a sci-fi fan fiction article on Substack, and this had the power. This went so viral that it crashed the. Well, sorry, no, it dropped the market on Monday. So if you haven't read it, it is very long, about 7,500 words. But I highly recommend reading it. This is one of those things where it's like bloody hell, it's long, but you just got to read it. And it kind of describes a situation where the world is 2028. I think it's June 2028, and it's sort of doing like an article looking back at what went wrong. So you have to kind of imagine that you're in June 2028 reading it, and you've got to get a feel for the like the general environment, the market, AI, macroeconomics, sort of from what's happened sort of roughly from now until June 2028. So it kind of describes like a death spiral, I suppose, by AI. It mentions a 10.2% national unemployment rate, which if you didn't know, like the current rate is just over 4. So 10.2 is huge unemployment rate. It says things like the S&P 500 is down 38% from all-time highs in 2026. And it has lots of statistics, lots of examples of possible outcomes, possible things that can happen. It's really meant as a thought exercise, a thought-provoking piece of one kind of idea, one thought process, some possible scenarios which could be caused by AI. So it's definitely coming from a more doomsday, negative kind of angle, but it's sort of looking at the rapid success of AI inadvertently triggering a global economic collapse by 2028. The core idea that AI becomes so efficient at doing white collar work, if you look here, so efficient at doing white collar work that companies naturally lay off expensive human workers, then they bring in software to maximize profits. But this kind of creates like a doom spiral, as I mentioned before, because initially this looks good for the stock market. EPS goes up, revenue goes up, but they say that it creates ghost GDP. So on paper, the whole market and the general economy looks good and it looks strong, but in reality, high-earning professionals who used to really drive consumer spending no longer have the income to do so. So it kind of creates this like a continuous spiral loop. So they invest more into AI, they lay off workers have less money to spend, and then to compensate, they then bring in more AI because they're bringing in less revenue from people spending. So it's very doomsday. It's very fictional because no one knows what's going to happen. Ultimately, like no one knows. But it makes the argument that our current financial system is built on a daisy chain of debt, mortgages, and fees tied to human labor. and this won't survive a world where AI removes the friction and the human costs that these industries previously relied on for revenue. So there is a lot more to it than that. It's very interesting, but it is a doomsday fictional, fan-fictional sci-fi prediction. But it was so viral and so powerful that, as I said, like it really had a big impact on the market. Some key names which were mentioned, I'll just fly through these, but basically, I'll go through them, but look for this kind of type candle because this is Monday. So Visa was affected, MasterCard, um, American Express, got loads of companies here. All of them having a candle on Monday. Some of them not as big, but all of them had this Monday red candle. Just to go through them quickly. This is Adobe. We've got Capital One. See, all of them had these negative candles. So basically, any company mentioned in the Citrini Research article effectively did sort of lost 2, 3, 4, 5, 10% on Monday alone. I think even Google had a slight impact from it. So yeah, see here on Monday. So Google's actually mentioned, and then even Google had an impact from it. So this went so viral and was everywhere, and it's pure fiction. So Citadel came out, a major hedge fund, like a really well respected name. They came out with the 2026 global intelligence crisis. I think it's sort of like a bit of a play on words because they're talking about AI intelligence and that kind of whole realm. But I also personally took it as a bit of like the other article was really quite dumb. So so this isn't as long. I definitely think this is worth reading as well. I can post both links in the Discord for you guys if you want to read both of these. But I highly recommend it. So this is posting a different view, a much more optimistic viewpoint, and it looked at more stats and facts rather than focusing on fiction and doomsday. So it shows here that like job posting for software engineers are actually rising a lot. For example, we can see here from May 2025, they've really kind of broken off from the trend from the overall job postings. And then a new business formation is also rapidly rising. Again, similar kind of peak here around 24, 25, and then that's now going up to the highs during COVID. So it goes through various evidence and various talking points that actually that thing on Monday was just full of shit. And this is trying to show a much more balanced and fair and more positive take. And the kind of thesis is that mass unemployment from AI is overblown. And it explains that whilst AI technology can improve itself super, super quickly, the actual process of businesses kind of putting in the AI is going to be a lot slower. It's going to be more expensive, and it's going to be limited by physical factors like the cost of energy and like the high cost of data centers. And it makes the point that when these new amazing technologies come around, like the internet or the steam engine, they make us more productive, but all of these changes didn't cause a permanent loss of jobs, a permanent loss of work. Things changed, things kind of adapted, and they lowered the cost of goods and services, which that in turn allowed people to spend more time on other jobs effectively. So I thought this was a really interesting piece as well, and probably better written than the other one as well. I do find it interesting that there's just such a focus on doomerism and this kind of way of thinking about AI. So the current top 3 financial Substack, like the most popular on Substack, are Citrini, so like the people we're talking about, Michael Burry, which if you didn't know is just constantly bearish. He's been super negative about the AI cycle. And I haven't researched Doomberg, but I'm guessing by the name Doomberg, they're also pretty pessimistic. So it just shows you how much of a demand there is for this doom porn, I would call it, to be honest. This doomerism fiction, this doomerism sense, because I think people are getting so wrapped up into AI just taking over all white collar jobs. I think partly people do that because it's much easier in our minds to imagine and think about what current jobs may get cut than what new jobs will be created. And that's just like that's just sort of that's like just my simple thesis that right now I'm sure we can think of maybe travel agents are reduced a little bit, maybe estate agents reduce a little bit, maybe taxi drivers end up like massively reducing numbers with full self-driving. But it's a lot harder to think like what whole new industries will actually exist. And then just one other Substack piece. This Nobody Knows Anything, also worth reading. Also, I will link it in the One Big Journey Discord server. Again, this critiques the Citrini article, and his general point is that I think this kind of sums it up here. So the level of uncertainty around AI's economic efforts is so high, and the quality and supply of real-world, real-time information about its economic effects so paltry that even serious conversations about AI from otherwise analytical people often veer towards a genre of fiction rather than the category of empirical analysis. AI land is so full of science fiction precisely because the space is so bereft of official, high-quality data, aka no one has a clue. And I think that's why the market reacted how it did on Monday. I think that's why there's been the huge mass SaaS sell-off. And I think that is why like various companies like Nvidia are just trading sideways. Just one final point on the article is that this did come out, and apparently one of the original co-authors, which has now come off the co-author list, actually was short a lot of the main names in this article, which is obviously very suspicious, linking back to what Jordan was talking about market, kind of like market manipulation, and sort of gain that unfair advantage. So that is obviously not right, not good. But to be fair, did they expect the article to go mega viral? Probably not. Although, even just for the sake of being honest, you should write XYZ contributed to the article and they are short Amex, Visa, MasterCard, for example. And just one final point, which I find really interesting, is just looking back at the massive changes which have happened over the last thousands and thousands of years, like the key changes like steam engine, coal, power grid, internet, AI. And so rather than focusing on too much of the content per se, in terms of like the economics of the article, which we're talking about, the global intelligence crisis, just more thinking in more of like a human, philosophical, holistic way of what will AI mean for me? What will AI mean for you? If you do have more spare time, free time, what will you do with that? Trying to like think ahead and plan for it now a little bit. You know, make like kind of like generally make yourself useful. Use Claude. Make sure you can build like a simple agent and do like a simple vibe code. And I'm not saying that everyone's going to be a software engineer, but I'm saying whilst AI is still relatively new, I think it was a good thought-provoking piece, which I personally took from it to do the best for me and to think about my life during what AI might look like and how I can benefit from it, like from a financial sense, but mostly from a human life living sense, and to navigate the best possible way through that myself. So AI is going to be a massive change. 100%. I totally agree that people will lose their jobs. Some people will lose their jobs. But as we've seen throughout history, technology has always created new jobs. And it was just a really thought-provoking piece, a fascinating article. And just my last point is, it is just truly incredible, guys, that a fan fiction, a science fiction article post on Substack can move the market that much. Just completely forgetting the content. This had so much power, and I think it just shows you what the market sentiment is like what the market sentiment is right now generally, that people are scared, people don't know what's going to happen, people are looking weeks, months ahead, not years ahead, and that's why a piece like that went so viral and had such a massive impact.
You want to touch on that, George? Because I know you've got something on that, probably.
Yeah, I was going to jump in very, very quickly. I don't want to spend too long, but I think this last tab here and kind of like what it might look like, it reminds me a bit of Jevons paradox, which I think was mentioned in some of the
100%.
counter arguments. So Jevons paradox is basically like the idea that when like a technological progress makes a big groundbreaking thing happens and a big pivot, like you can see here listed, sort of like increases the efficiency of something or the way like a resource is used, the sort of falling costs or the easier access to it or the extra abundance of it then increases the consumption of whatever that thing is and then the use up. So things that you would maybe have expected to fall actually end up rising. And if we think about actual sort of real like sort of substantial examples of that, the cost of petrol, if petrol dropped in price massively, and fuel becomes cheaper, then driving becomes cheaper, and then people are probably going to drive more rather than walking. They'll drive more.
Yeah.
And then people are driving more miles, more fuel consumption because it's cheaper, and we see that in a lot of places. And I think it also works on the flip side where rare earth minerals and rare earth resources, as supplies and of those run out and the price goes up, then new sources of that resource that were previously unprofitable. Take oil again, for example. Oil fields that previously would have been too expensive to extract, once oil reaches a certain new price because it's running out, all of a sudden that oil field becomes profitable, and now there's a new oil field to drill from. It kind of pushes that more. So that reminded me of the Jevons paradox, where actually you can things sometimes they're sort of self-fulfilling in that sense of where something is improved to an extent that the consumption gets driven up.
Yeah.
I was going to make another point more generally. I think just more so going back to the Citrini report in general. Listen, I think good things like that are good to read through. Not all of it. Some of it that is like complete nonsense and crap, then obviously not. But some things are good, sort of food for thought and good bear cases to hear. And I think if there's ever something that you're bullish on, you should be looking out for and absorbing the bear cases and sort of test your bull case against them and be able to disprove them or distinguish them. And if you can't, then obviously then look at the balance of it being still more bullish than the bearish. And if you can't do that either, then obviously then you reconsider if you are truly bullish or bearish on something. But I think it's good to have, and you shouldn't at all avoid bearish sentiment or bearish sort of theories around stuff that you're bullish on, because it's important to hear the other side of the story.
Just what do you guys think, though? Just touching on that, Jordan, the fact that so many people are currently seeking out these bear theses, these doom articles, this fear porn, that I do totally agree with your wider point, Jordan, that obviously if you're bullish, seek out the alternative view. Like I don't agree with that. I just sort of like slightly detaching from that. I just worry a little bit that to get it from good sources, basically, is what I think I'm trying to say. Like, I'll be honest, I've now read the Citrini article twice. On the second reading, I found it a bit more slop-like. I'm not quite saying AI slop, as it like, but I think it was as I read it twice, it was a little bit sloppier. I've read some of Michael Burry stuff, and he's just wildly wrong. I haven't read any of Doomberg, but it's a funny name, isn't it? But just what do you guys think about why people are seeking out that negative viewpoint so much? Is it just because of that huge uncertainty over the future of artificial intelligence?
I don't, but I'm going to have my take on this. I don't think it's bad. I mean, I sat and read this report once. I ain't got as much time as you will. But like I say, I think it's always good to, I play devil's advocate with absolutely everything. I think it's always good to play both edges of the sword. And I love reading, not so much negative. I mean, there's Paul in the chat. You'll see what's going back and forth for each other. I'm always down to hear the wrong, and I'm always down to hear the good. I think it's actually a problem when it becomes too much of an echo chamber, when everyone's singing and dancing and thinking that everything's great and hunky-dory for the future. I think these papers are important. I think you're right, though. You have to obviously mine through the slop because no one really knows what's actually going to happen. But I think having a double edge of the sword is important. I think, in my view, I like this type of stuff because it gives multiple perspectives on something that I wouldn't say that it's more fear mongering because it depends on how emotional you are when you're taking these things in. But I like them. Obviously, I like it when it's presented properly. I don't think the Citrini paper was too bad, if I'm honest. I understand what you mean by some of it being sloppy, totally. But I think it was a very good take on a possibility, if I'm honest.
I think for me, it comes down to something quite simple, which is just people are always looking to predict or work out and figure out and know when the next bull run's going to come, when the next bear run's going to come.
Yeah.
And after 3-4 years of a bull run, we're going into the 4th year now, people aren't looking for the next bull run because we're in one and it feels like we're well past the early stages of it. They're more looking for that switched and the flip to a bear market and wanted to know when it's going to happen because they want to protect all the profits they've made over the past 3 years, and they want to be able to either profit off of that bear market or just sort of have that protection, and they've enjoyed the bull market for so long. So I think it simply, for me, just comes down to that. After everything that we've had, especially from the last year, really strong greens and all-time highs, etc., people are looking and trying to protect themselves and trying to work out when that's going to change more than how long it's going to continue for.
I think for me, amongst the uncertainty and the fact that we've had such a bull run, when you're in such good times, you always look for the bad times. But I think in terms of the world and human nature, I think the world's constantly negative. It's only negative in the news. I think sometimes people find a lot of comfort in looking at the negative rather than the positive. And they always look at what the other side is. If they think they're right, they're always going to look and see if they're wrong, and that might start to creep in. So yeah, I think sometimes just human nature. Sometimes a lot of people feel comfort in the negative rather than the positive.
Yeah, I agree with that. And also just my genuine weekly plug for our Discord, because I really value it. I know genuinely I would be buying into this FUD, the Fear, Uncertainty, Doubt, without the Discord. There's just something about bringing everyone together, supporting each other, which means that I can block out that noise so much more easily, which might sound a little odd, because actually I'm one of the loudest voices in the server and one of the loudest voices for bringing positivity. So, but I don't know. I think because I kind of feel a little bit of like of that general responsibility, I don't want to share like my random doubts or unexplained worries with other people. So I think it kind of forces me to kind of think through my ideas and then share them. But I think just for everyone, having us and having others in the server who share our genuine ideas, are positive when it's positive, negative when it's negative, but don't get too much drawn up into that FUD, really benefits us, because absolutely 100%, like if I went through this or April without like that Discord, I would have told at the bottom, 100% would. So
yeah, no, I agree with what Will's saying. I think on the back end of that, which I'll just touch on, it's important to have good people around you. And like I was just saying about playing double edge of the sword, because it's very easy to get, and I've just been saying it with James in the chat as well, it's very easy to get consumed by the negative and the wrong, and that's how mistakes get made. Is there anything else you want to touch on that subject, Will, Jordan, or John? Or are we good to move on to the next?
It just feels like one of those topics I could talk about for like half an hour. So
yeah,
I have to just stop now, I think.
No, I agree. And I know a lot of there's been a lot of great stuff to be talking about here, and I know a lot of people appreciate it. So we'll get through this a bit quicker because I don't want to drag too much on this. So Zeta, I'll say Zeta, I'll probably butcher it. I'll butcher everything I say. So me and John are going to touch on this real quick, so I'll do my part first. So let me pull Will's down. So what is Zeta? Zeta is an AI SaaS company. So obviously their revenue, they beat by 3.93%. This is a stock that I hold. Their EPS, they did miss. They were still positive. Again, people sometimes look at the forefront of the numbers and wonder what this is. Me and John did some digging. This is actually down to company employee incentives and stuff like that. They have been doing buybacks as well, but the incentives offset the buybacks, which did offset the EPS, so it wasn't actually something to worry about. Won't go too much into the numbers because that is what John is going to touch on. Their 18th straight beat and rise quarter, which is absolutely phenomenal in my opinion. I love that word. They've been growing, year-on-year growth. It's great. Obviously, like I say, I'm going to let John touch into the numbers. The reason why I like Zeta so much is because they're very vertical. So if one part of the market is down for them, they're touching every single place. So they're advertising, education, healthcare, automotive, technology. They're everywhere. So if travel's down, don't matter. Consumer and retail's down, yeah, they're going to feel it. It's 24% of their business model, but it's not going to kill them. They also serve 51% of the Fortune 100, which is absolutely incredible, to be fair, when you think about it, the depth of where Zeta actually is with their marketing and stuff like that, with their ads. I think it's a great company. I'm glad that me and John did a lot of DD on this, and I ended up getting into my PT where I wanted to. Built a great holding on this. So a new category is emerging, and what they're calling it is AI-powered marketing. What this means is normally the average marketing would reassure off basically it coming back to human, analysing it, seeing what works, and then tossing back out what does. With the way that they're doing their AI version of this is where everything rolls into one section. They can program it faster on the spot in-house for what that needs to be marketed for said customer and get it back out to them ASAP, leading to much more efficient results. So what they're trying to build here is, I wanted to do it this way, is 3 different zones of how normally it happens. So you have data management, you have market automation, you have engagement. As you can see, Salesforce, Adobe, Oracle touch over 2 of these zones. Trade Desk does the engagement side. What a terrible stop that's been, I will. So
now, to be fair, I just want to put in that. Did you hear in the earnings call that the CEO said that they've actually been taking a lot of like general business from the trade desk? So like I think that's quite rare for a company to say, like actually name the competitor and say, we have stolen business from the trade desk, we're doing really well. So I think just massive plus for Zeta, massive minus for the trade desk. Like, wow, to be honest.
Yeah, and like that's exactly what the point is. So normally these businesses work in different sections. As you can see, Salesforce cover it. What they're trying to build, Zeta, the Zeta Edge, is actually all 3 in one. So Zeta will actually touch on data management, market automation, and engagement, all in-house, all on one powerhouse. The CEO is very, very bullish. He reminds me a bit like Eric from Ondas, and I love CEOs like that. I love enthusiastic CEOs. That's exactly what we want. I did have another slide, but I don't know where that's gone, which was some comments made on an interview that the guy did with the CEO. There was some fantastic stuff on there, but I seem to have messed off that one there. I will post that video at some point because Zeta is the CEO over the next couple of years. Their goals are aiming towards 2028 is incredible growth. I've got a video coming out on my channel tomorrow, which will touch more on Zeta, however you want to call it. So yeah, it's going to be a big one for me that I like to hold. John, I will put it over to you now, mate.
Amazing. Yeah, so me and Jay looked at this together, and the financials were quite impressive. If we look at the stock price itself, it was up around 4% for the week. It's currently trading around $17. I think Paul in the chat has just said that's down 2.5% for the week. But performances like this, I know they missed the earnings per share, but the long-term outlook, the long-term growth, and the short-term performance has been quite good. So for me, the highlights, like Gia said, this was their 18th straight beat and rise quarter. I don't know if there's many other companies out there that have been able to beat and raise their outlook for 18 straight quarters, so that's quite impressive. The quarter 4 revenue was $395 million, which was up 25% year over year. Free cash flow grew 78%, which was quite impressive, and EBITDA grew 44%. And then super scale customers grew 24% year over year to 184. And a super scale customer, which I looked into, is a customer that brings in $1 million revenue per year. So that's quite good growth on an account of that size. And I think they're seeing more accounts grow and growing faster. So this time next year, who knows, it could be double. We'll just have to wait and see. In terms of what the CEO said, he said, this consistent performance is not the result of a single product cycle or an easy comparison. It reflects the compounding power of our system. So as Jay showed before, they're trying to amalgamate 3 different sections of the market into one solution. And that is the compounding power of what they can bring. And it's clearly bringing results for the customers. In terms of the results, this is a further show of the results. So for the financial year, which I'm going to focus on here, they had 1.3 billion revenue. Cash from ops was nearly 200 million, which was 49% growth. Adjusted EBITDA was 280 million, which is 44% growth, and adjusted EBITDA margin was 21.4%. So customer growth, which feeds into that super scaler comment. So they've had 19 consecutive quarters of sequential scaled customer expansion. So as you can see there, there's 184, which has at least 1 million revenue. Year over year, this is 14% growth, and they believe that the super scaled customer growth will be 48% compounded annual growth rate for the next 3 years. But yeah, if you look at the accounts between 100k to 1 million, that's also grown quite healthy. So it'd be nice to see a few more of those jump into the super scale customers. And then for 2026 guidance, they've increased the Q1 revenue and EBITDA growth by a further 1%. So I believe this was to 26% growth and 41% growth on the EBITDA. Then the financial year revenue increased by $25 million to represent 35% growth. So even stronger than what we've just seen. And then EBITDA increased by 6 million to represent 41% growth. Free cash flow has been upgraded to 41%, and they expect to be positive gap for the financial year 2026. Now, Jay mentioned that they have a 2028 business plan in place, which they have also upgraded the guidance for that. So revenue, they've upgraded that in guidance by 9.5%, which suggests a 23% CAGR. EBITDA is up 9.1%, which suggests a 25% margin once they get there. And then free cash flow is also up 9.1%, which will give them a 65% conversion rate by the time we hit 2028. So quite healthy financials there. Hopefully they can deliver on it, because like you say, me and Jay looked at this, and this presentation was heavy financials, and there was financials everywhere. So for me, I enjoyed it, but for a lot of people, they might have had a headache. But yeah, that's what I picked out mainly for the financials. Quite an impressive business, and I know I've probably banged on about this before. I look after marketing contracts for my employer, and that slide that Jay put up before, out the 2 out of 3 sections, 2 of my suppliers are in there, and companies, especially enterprise companies, want to consolidate suppliers. They don't want to keep a massive magnitude of suppliers. So if Zeta are out there and the staff saying, look at me, I think they can healthily grow their client base going forward. But yeah, well impressed.
No, I think it's a great company that's got a great outlook on it. I know we've gone over a bit of time on a few things, so I don't want to consume it too much. John, if you want to jump straight in and start doing Netflix, obviously we'll talk about that because it's a bit more of an important section for that.
Yeah,
well, no, I like Zeta. I think it's got a very bright future, to be honest. Right, yeah, then John, take it over, mate.
So I do apologise for the harsh red, but as we know, on Netflix, we're going to buy Warner Brothers, and Paramount has been crying on the side, and Paramount's finally got what they've wished for. So background-wise, December 2025, Warner Bros. Agreed in principle to be acquired by Netflix for studio streaming operations only. Paramount launched a bid war, but for all of Warner Bros. Assets, and the Netflix deal came under massive scrutiny from all angles. They did go to the Senate, I believe it was, and they were more focused on the politics than Netflix rather than the deal. That was a strange watch. But yeah, so the Netflix have actually pulled out of it. They didn't want to raise their price any further, and the CEO said this transaction was always a nice to have at the right price, not a must have at any price. And the stock price off the back of this has actually improved. So it's gone up to $96, which is up 23.8% this week. So Netflix shareholders have reacted positively to the news that we're not going to go for it anymore. a lot of people were skeptic. But it took on around 11 billion debt, which is usual. But a lot of people don't feel like Netflix need it, and Netflix feel like they don't need it at a premium price. They're quite comfortable with what they already have. So what's happened is Paramount declared a bid of $31 a share, and Warner Brothers decided that was a superior proposal, and Netflix would have matched that. So yeah, it's basically being handed over to Paramount. Why this matters? It's a massive industry consolidation. It's different to Netflix acquiring it. They are slightly a different sector, as Paramount was already in that movie and filmmaking segment. Paramount needed to compete with streaming platforms such as Netflix, YouTube, and Disney. And Warner Brothers put itself up for sale due to industry pressures and declining legacy revenues. So streaming is really taking over the revenue of these legacy companies. Paramount, a bit more details on how they're going to do it. They're going to be issuing $47 billion of new Class B shares to help fund it because it is an all-cash deal. They believe it to be pro-competition and will set them up to compete with the big streaming platforms. Like I say, this isn't a done deal. This still has to jump through all the hurdles. Apparently, they're still going to be quite tough on them in terms of regulations, but they believe that this acquisition will improve the user experience, generate financial and operating efficiencies, and eliminate redundancies from the industry overall. So that's a quick roundup of what's going on with that. Be interested in all your guys' thoughts, because I was quite positive about Warner Brothers going to Netflix in the end, but I think it's quite positive that they're not going to buy it at a silly price, basically.
Yeah, I mean, it's a massive change. I think there's one really key point to highlight. To be fair, John, is that Paramount will be paying $2.8 billion to Netflix, because the agreement between Netflix and Warner Brothers, if it didn't go through, Warner Brothers will be paying $2.8 billion to Netflix. But as part of the deal, Paramount have now said, you know what, we'll pay that to Netflix. So effectively, Netflix have got $3 billion for doing pretty much nothing, which obviously adds a massive amount of value to their balance sheet. And the earnings are going to look really good for this year now, effectively. But in terms of the whole thing as a whole, so I think Netflix bid in total, the maximum was 83 billion, and it's just been accepted for 100. I think it's 110, 111 billion. It's a lot of money. It is a lot of money. I think around 50 billion has been personally backstopped by Larry Ellison, and then they're taking up 60 billion in debt for it. Wow, it's one of them where I think buying the IP makes a lot of sense, but it's just a risk. It's a hell of a lot of money, and already this IP was on the market before, and it's actually got sold for a similar amount. Then it got sold for less. Now it's got now it's back to the over 100 billion mark. Overall, I think this was too much. I think Netflix was right to pull out. And to compensate, they're spending $20 billion now on shows, films, etc. So I definitely get the pull of wanting Harry Potter, Game of Thrones, etc. But I think overall, I think Netflix shareholders should be happy, because they're going to be getting great new Netflix content with that 20 billion. But ultimately, how do Netflix continue to grow? Because they haven't run out of people per se. Everyone says that about Meta as well, but they are slowing the amount of new people they can get. So they are going to have to think of different ways, different products, effectively, which they can keep growing users, keep growing revenue.
You got anything on that, Joe?
I was going to say, hopefully this means that the likely subscription increase that us lot were going to have to face won't be coming through from Netflix anytime soon. I think it's quite a big statement for sure from Paramount. I don't know if it's we want to compete as your main rival. We're not backing down from the market share the whole way through. John, as you said, they're kind of slightly different sectors to what kind of Netflix is most known for, has been sort of moving into. So we'll see how that plays out. It's yeah, as you say, it's a huge consolidation of market from two players becoming one. But yeah, I also agree that similarly it's bullish for Netflix. Like as you say, they get a load of free cash, and I think they can sort of concentrate into what is sort of their niche a little bit in the market, on the creation stage, in the way they're more their sort of platform and their company is like almost a more modern take of the sector that's been around for a long time. So yeah, I mean it's a big end to quite a big saga. With, as you say, lots and lots of money being flown around, so hopefully it doesn't pass on to subscription charges for most of us.
Yeah, I think also from a more of like a political point of view. So Larry Ellison, so he's the owner. So basically, Oracle now are going to own part of TikTok. Larry Ellison's going to have control over various news channels like a CNN, obviously Warner Brothers, obviously Paramount. So it's a big consolidation in the space in general of these bigger players, who Larry Ellison has seen him more as a bit of like a controversial figure on the right. I don't think he's like officially MAGA, but he's definitely friends with Trump, which means that Oracle is tarnished a little bit by some people. And it will be funny to see some Democrats now complaining about like a big monopoly from Paramount and Warner Brothers, when I bet they wouldn't have said anything for Netflix and Warner Brothers, when actually that was going to be like a bigger monopoly. So like it will be all silly. There'll be stupid headlines. Like it's going to get all political, but I think it will go through because, as I said, like he's pretty cozy with the Trump administration, and I think Trump honestly wants CNN to stop being quote fake news CNN. So I think it goes through. It's a lot of money, but yeah, I mean, let's see what happens. Hopefully, we can still watch our favorite young wizard somewhere else.
And I guess that, like I say, it's obviously the argument is that in the future Paramount and stuff like that gets bought up for a lot cheaper anyway. But we'll see how that one plays out. I know a few people have said that. I don't know if you've seen this one from Pablo here, Will. I don't know if you can touch on this or whether you just worded it a little bit different in there. Like, is that something you can touch on, you guys? Or
so how will the entry costs work? Basically, in my opinion, the TLDR, Larry Ellison's friends with Trump, is going to go through. Trump didn't like Netflix, so that was iffy, but I think he said on record he wasn't going to meddle with it. So I'm pretty sure both of them would have gone through, but I'm pretty sure the EU also has some say, and we know what they're like with their rules and regulations. But if I had to put money on it, which I wouldn't because I don't gamble, I do think this deal will go through, to be honest.
Yeah, no, I believe it will as well.
Trump administration will say, "Yep, all good." EU will probably say 500 million fine.
Yeah.
Yeah,
they'll say, "Oh yes, you can do it, but you have to pay us first." And no, it's not a tax; it's a fine. And then when you set up your whole process, then we'll start taxing you.
Sounds about right. So, on the contrary of things, then, so moving into the next section, obviously we'll look at the earnings first. What's your views on this, boys? Is there anything you're looking forward to this week, or anything you're keeping an eye on?
I think probably Broadcom on Wednesday is, by like a quick glance, the biggest name, and definitely like the one I've got in my calendar for earnings next week. Broadcom, like a massive chip player, big competitor in the chip world. Obviously, they make the A6 chips. I joke and call them the sneaker company because of A6 trainers. But no, massive earnings. Last earning was fantastic. No, sorry, I think it's two earnings was fantastic. Last earnings, there was some issue, but overall, long term, very bullish Broadcom, but it's probably going to be choppy short term, to be honest. But yeah, I think for me, Wednesday after close of the main one, I don't recognize a lot of those companies on there, to be fair. Oh, actually, I've just seen your Orange Space company on Monday, Jay.
Yeah, so I'm obviously looking at ASTS, so I'm obviously watching that. I'm interested to see. I know a few contracts come through, so it'll be interesting to see what's happening there. Target and Costco I'll be watching on just for customer consumer more than anything, to see what's happening on those. I like to play a couple on those. You are right, Broadcom, you places like that, so watching them. There is a few next week to be keeping on. I mean, Archer will be nice to watch, if that's that's Archer. So that'll be interesting because I know they've just sorted some new deal with Uber for what they're doing in Dubai. So that'll be interesting to see. But yeah, the main one I'll be watching there for stock that I've held and I'm watching is ASTS. It'd be interesting to see whether that comes down more to a safer zone or if people are still buying into that speculation of buying up early before. And I've just realised another one on there, Will, that we'd snuck through the nets there. BBAI chilling there on after close on Monday. I'll be keeping an eye on to see if Kevin answers any questions for a change. But to be fair, Will, we've just noticed it massively there. It's because it's small. Berkshire Hathaway's on Monday as well.
Oh, okay, yeah.
It's tiny there in the corner. Yes, that's tiny. But is there anything you're looking there for, John George? Anything you've got there that you're watching for the week ahead?
Yeah, Broadcom is definitely the biggest one there. Nothing that I'm directly invested in, I don't think. Target for me is a little bit different. So Target versus Walmart. Walmart for me is more of a consumer staple because Target has more of Target's revenues come from the non-necessities like electrical goods and that sort of thing. So Walmart usually has a stronger correlation between economic uncertainty and people still buying the necessities versus Target, which is a slightly less of its, as I say, it's smaller revenue share of that sort of the necessities. So Walmart is usually the better indicator, but Target for sure can feed in as well. Costco is obviously a great one for predicting earnings because it's basically subscription based in terms of what their revenue comes from. I mean, I know some other popular ones on there. JD on Thursday, JD.com, not the UK JD, the China JD. Yeah, the biggest one for sure is.
And there is also Marvell on Thursday, which is the main competitor to Broadcom. Was it Amazon who have some of their Trainium chips with Marvell, I think? So yeah, so Broadcom, Marvell are the main AI chip names next week. John?
I've got CrowdStrike as one I'm watching because they're a major competitor to my Palo Alto. Can't believe I just said that after you've mocked me all the time. Abercrombie is also one I've been watching for about a year, so I keep in line with their earnings as well. Apart from that, there's nothing that really tickles my interest apart from the consumer staples, because as you know, I've mentioned this previously, I always keep an eye on them. Yeah, it's going to be a quiet week for me, thankfully.
No, so I think that touches on that. And then obviously the key events for the week, I know it might be a little bit smaller on the screen. So we've got the US futures reacts to the Iran situation, which is tonight at 11 p.m. We'll kindly edit that out for the guys in the Discord. We've got February ISM manufacturing, February ADP employment data, initial jobless claims data, January retail sales data, and then obviously February jobs report, including non-farm payrolls. Obviously, Will, I'm just going to talk to you, but obviously, the main one there is just Friday, isn't it?
Yeah, I just want to whack my screen up quickly. I'm just going to get it up now for you, Jay, just to put on. Basically, Friday is the big one. Friday is absolutely the big one. I've got it up here. So non-farm payrolls, as I have mentioned before, is one of the big three. So there's non-farm payroll, there's PC inflation, and there's GDP. So there's tons of data. So the reason why I wanted it shared was because there is a crap ton coming out on Friday. Some of this matters, some of it less so much, but this bad boy here, non-farm payrolls for February, is a key indicator of the market health. And effectively, it looks at all new jobs in the US which aren't in farms and private residences. So yeah, massive Friday. And also the reason why this is so important is because the market really generally reacts to these key events because of the effect it has on the Fed and the interest rates, but also it's one of the best indicators, macro data we have for overall market health. So those three in red are more important than the rest, but all of them are coming out Friday, and that is like the key day next week for macro data.
Yeah, no, I agree with that. And I think that's the main one people need to be watching. So obviously, I think the main things that we're watching this week is how the next few days unfold in regards to conflicts and agreements and what happens next. And then obviously Friday is going to be massive for numbers. So very maybe volatile week. We never know. But we'll see how that goes for sure. Obviously, so touching into the back end of the stream now, we appreciate everybody being with us for nearly 2 hours. We do really appreciate it. So thank you. Predictions for next week. So we'll start top to bottom. So that's how we're going to do it. So John, you are so John, you can go first. We're going to let you go first since you got it right last week. Talk to us.
Red this week.
Red. Any explanation, or you just straight have it?
That's my gut feeling. I wasn't involved in the market last week, and I got it right, so I'm just going to trust it again.
Happy days. There we go. John's red. Will, what's your view, mate?
I'm going green. I'm going for the same old strategy. Like, we're going to open up shit. I'm going to slightly improve over the week, basically. That's what I'm hoping for.
No, that's a fair point. So I'm next. Oh, God, I wish I were ready for this. Yeah, no, I think green, because I think we're probably going to open up crappy tomorrow, maybe. I don't even know because it's there, but yeah, I'm going to go green as well. I think green's going to be the right answer. George, where are you at, mate?
Yeah, same for me. I think green. I think a lot has happened over the weekend for things to react to. And then equal on the flip side, like it's not as if next week will be the first time that some of those escalations have happened for it to react even more so. So I think it will open lower than last week closed for sure. But I don't think there's as much to bring it down throughout the week as there is to sort of keep it flat or bring it up. So I'll go green as well.
No, that's good, man. So there's the thingy. So obviously the stream vote now, we will shut that. So we've had 103 people vote this week, which is the biggest amount of votes that we've ever had. So we do appreciate everyone that's tuned in and everybody that does it. We've gone 63% green and 37% red. So the stream have gone green as well. So it'd be interesting to see if they get a point. So yeah, no, we really appreciate everyone that's sat with us for nearly 2 hours, including you, Paul, even though you've just been screaming abuse at me. So yeah, thank you very much, guys. It's been great. And we look forward to seeing you all again next Sunday at 8 p.m. So thank you.
See you guys.
Cheers, everyone.
Bye, guys.